Hello, good afternoon, or whatever part of the day this is. I'm Mark from Red One, and
Chris Pankwitz from Rapid Mortgage.
yep. So today we're going to chat about the different types of home loans that you can ascertain, because there's all kinds of confusions, and depending on where you live, what type of job you have, depends on which way you're going to qualify. Chris is the expert, and he's going to take a few minutes here to explain the various different types and the assistance programs that will help you get into some of those programs. So, Chris?
Thank you. Yeah, so as far as the different loan programs out there, it is important, like Mark said, to meet with your lender and go over the different options that are available to you, because there is no specific loan for each person, just one kind of cookie cutter loan. There are options out there for everyone. So just depending on what fits you and your family's needs, and what you're approved for, you really need to take the time to kind of explore that to make sure that you're putting yourself in the best position, moving forward to succeed. So as far as the programs out there, the big ones you're going to hear is going to be the FHA loan, conventional loan, VA loan, USDA loan, and there are some first-time home buyer programs, some down payment assistance programs. So there's a lot out there. So like Mark said, it is important to meet with your lender and kind of see what options are out there. As far as the first responders, teachers, there are some specialty programs out there to help make that transition easier, for assistance with down payment, for putting down less than the normal minimum. So there are some 3% down programs, conventional, versus the typical 5 to 20% down. Whereas something like the FHA, they're looking at that 3.5% down minimum. Then we kind of get into some of the other programs as far as with the VA and the USDA, where they actually don't have a down payment requirement. So you could actually, get approved for a loan with putting no money down, no equity in the property, and basically just paying for your own closing costs and inspections.
Chris, isn't USDA the United States Drug Agency? How do you get a mortgage from the drug agency?
So it's not that. It's for mostly for rural housing. So if you're looking inside the city, not going to be a USDA eligible area. You're probably looking outside of the 270 belt, probably a couple miles each way, and it's really to help, again, people that are more in the rural areas that want to get into these homes and don't have to put any down payment to start. Basically just paying for your own closing costs and your appraisal, just to kind of get rolling with your new home.
Is there a website that they can type in an address and see if it's USDA or
yeah, definitely. So there is a website. It's actually just the USDA. If you search USDA property eligibility, it'll actually pull up a map for you, and you can literally type in any address in the state of Ohio or whatever state we're in, and search to see if it is eligible. I mean, it'll pop up green showing you good, or red showing you no good, basically.
So with the specialty programs of the first responders, the teachers, things, are those programs beneficial for the average person, or for the person that needs some assistance to ascertaining a loan and buying a home, or how does that work with the buyer?
Sure. So a lot of those programs are set up to for down payment assistance, for grant money, to kind of help them with that portion of the purchase. Okay. Some of them are just for a lower interest rate, a lower mortgage insurance rate. So it really just depends on the individual and what they're trying to achieve. So for instance, if we have someone that maybe is like you said, a teacher or first responder, and maybe they just finished school and they have a lot of student loan debts, and they're like, hey, I just don't have the funds to put down. Well, then that's a great program to get you in the home, start building the equity, now, versus waiting to save up the funds. But on the flip side, if someone does have their own, down payment money saved, then sometimes it might be more advantageous to put money down to lower that monthly payment, to get that equity already in the property and essentially pay the loan off sooner. So it really just depends on the individual. So that's why it's important to kind of get with your lender and see what's going to be the best for you and your family.
Okay, all right, that's great. One last question. We talked about earlier in a different session, we talked about the pre-approval, getting their credit score up, and now they're buying the home, and we have the closing So if they keep improving their credit score, at what point can they come in and refinance with a higher credit score rate to get their interest rate down? Is that something that you still work with them once they close?
Yes. So, something we do is, basically anyone we work with, we close with, we still want to keep in touch with them moving forward. We work just like realtors off of past client, current client referrals. So it's important to kind of give our past clients and your past clients updates in the market. So if they purchased 2 years ago when, interest rates were in the mid 4s, low 5s, and then all of a sudden we've seen this, drop in rates down to the 2s and the low 3s. Now it's time we're going to reach out and say, hey, let's look at refinancing. Let's look to see what options are out there. If we've built enough equity to make an impact, to maybe we want to, pay debts off. Maybe we want to pull cash out to do that home improvement project we've been waiting to do. So, that's definitely something that, we're going to follow up every 6 to 12 months just to check in, just to see if there's any changes in the market that could be advantageous for your client.
Yep, that's one of the reasons why I always refer my clientele to Chris, because it's about a relationship. It's about working together. It's just not you do the credit app and you go to the closing table and you close and you buy a house. You continue that relationship with Chris and his team to see how you can reduce that interest rate, whether the market's coming down, whether your FICO score is going up, or whatever has changed, or to pull money out for equity. So that's why it's always important to continue that relationship with Chris and his team, because it's to your advantage down the road as everything changes that you can get a lower rate, or to have some flexibility in the home that you recently bought. One thing we didn't talk about was the 203K. Forgot all about it.
Yeah.
Is that something that is still a viable option out there in today's market?
Since basically COVID, it's more something that investors have kind of shied away from, as far as like doing the rehab loans, doing the renovation loans. Those products are still out there. They're just not as, flattering as they once were, as far as rates, things like that. But yeah, the 203K, they consider like the conventional one, the home style renovation, which is more of a amenities upgrade. It's more of like not a necessity, not like the house is falling apart, but more of we want to do some upgrades. Those programs are still out there. It's just, the importance with doing those is having a contractor that's on top of his game and ready to fill out some paperwork for you.
Okay. All right. Well, thanks, Chris. You want to give them your telephone number so they can call you?
Sure. Yeah. So you could reach me anytime on my direct line. It's 614-845-5212.
Thanks, Chris. Appreciate it.